Hello, everybody. Welcome back to the channel. If you are new around here, welcome. And if you are a returning subscriber, thank you so much for coming back. I do appreciate you guys being here. Please forgive me for the smidget darker lighting. It is very early. It's the crack of dawn at my house. And I'm trying to film these videos before the house wakes up. I have 3 kids, a husband, and it's really early. So these are the only way I can do these videos. And besides, you're not here for me. You're here for the numbers and the content. So subscribe, like, and share. And yeah, let's get started. So I'm doing a portfolio update today. So I brought up Robinhood first because I want you guys to see that we're down a lot. Now, if you watched my previous video where I talked about, like the questions that I've been getting, do I feel safe with our investments in terms of like the FDIC and the SIPC, in terms of the security insurance, and are we still going to invest? Are we scared that Fidelity is going to go out of business or Vanguard? And I simply answered in that video, no, we're not. And if anything, we're going to continue to invest. But that does not mean that our positions, that our stock, that our retirement is not down right now. It is down a whole lot. Okay. I'm not even going to lie to you guys. It's down a whole lot. But at the end of the day, we know, because we've been investing for some time now, a couple of years, that the market has lulls. It has ebbs and flows. It goes up, it goes down. But if you zoom out, like with this account, if I come to all, guess what? Overall, it goes up. Now we're coming down right now because of the crisis we've had with SVB. But I'm going to continue to buy and hold. And look at this account. I've had this account since September of 2020 or August 31st, excuse me. We're up 16%. So always zoom out when you're feeling in doubt, when you're feeling nervous. Zoom out. When you look at your accounts day to day, it can look really scary. And let me just tell you, it is, right? But again, we are buy and hold investors, or I am a buy and hold investor. I don't day trade. I don't do options. I don't short the market because that's not my expertise field. I like to stick to what I'm good at. And honestly, I have a whole life outside of investing. In my children, my husband, I have things going on, and I really don't want this to take up all of my, my life. There's a lot of other things that, I want to do in this world, and investing is a big part of it, but it's not the only thing. Now, keep in mind, all of these companies and funds that we have in this account, we like and believe in. So it's just the issues that are going on. The Fed is going to keep increasing interest rates, and the SVB debacle didn't help at all. There's a lot of fear right now, not just in the markets, but just with the banking and the overall economic system in this country. But I'm going to show you our spreadsheet in just a moment, but I wanted to share with you some of the individual positions where we're down like a whole lot in, okay? Because I want you guys to see that is not always glittery. Like there are times when the market is bad and you have to really hold on to your principles. You have to stick to your principles. Look at this. We're down 16.61% in CVS, or almost $500. Yes, it gives a real sometimes when you invest. Let's see what else. I'm trying to pick the ones we're down in. I know some of these were up in, like BP, we're up in. We have a really good average cost of $26.49. That's my internet, so it's a little slow. So we're up 32.69% with BP, but then again, we're down in CVS. Let me try to find another one where I know we're down a lot, and so I can show you that. I want to be open with you guys. Verizon is a very good one. Let me see how much we're down. We're down 30%. Look at this. Move my face. This is our average cost. We're down 30%, or almost $600. Again, our average cost is $52.54. The current price is $36.60. Again, just down, 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 down. One of my favorite stocks ever, especially for monthly dividends, is Realty Income. Realty Income is down. Now, I will say we buy Realty Income every single paycheck. So we're kind of buying whether the market is up or down. So we're down $700 in this position, or about 8.66. But I'll tell you this, the dividends that we have gotten in Realty Income between this account and Interactive Brokers have been more than $700 since, I would say, in the last year or so, because we have over 121 shares here, and in Interactive Brokers we have almost 300 shares. So yeah. So again, that's why I like to just buy and hold on what I believe in. I love Realty Income. I did a super detailed video talking about what it is, why we love it so much. I will have it, somewhere on the screen. Next we have, let's see, I want to find some that are down. Let's look at ABR. Okay, look at this one. This one is down as well. Again, not everything is up. And we believe in these companies. Good, solid companies had great earnings. Just they are victims of, what's going on right now. Just like with the SVB debacle with the banking. Guess what? Chase fell. Bank of America fell. They all fell. And they had nothing directly to do with that. But again, it's by association. So, it's going to come back. We're down 22.36% in ABR as well. And I wanted to show you guys that even the safe ones, VTI. Let me pull up VTI real quick. Look at VTI. I want you guys to see that even something as safe, something as conservative, something as, well structured as VTI, you're talking about over 4,000 companies inside of this one fund. They are not immune to anything that goes on. They are still in the stock market. Past year, they're down almost 13%. Okay. But again, to me, anytime I see VTI under $200, that's a buy because I'm buying low. So you can see that nothing just goes straight up. Everything gets affected. When the market is bad, when there's outside issues going on in the economy, it all affects the stock market. But like I said, we are buy and hold investors, and you're going to continue to see us buy. So let me take you to my spreadsheet so that you can see all of our numbers. So this is where I keep track of everything. Now I do have like a dividend workbook. I have an investing workbook for beginners. So if you want something that you can write in almost like a planner, check out the links below. I have my Amazon storefront where you can get like all of the physical products, or I have my website where you can get a lot of the digitals. And that's why I have a lot of the private groups as well. And I have like one-on-one chats where we could just talk, you and I, like this, face to face, where you can show me your accounts or your spreadsheets and we can just talk through it. I'm not a financial advisor, but you do see all the accounts. I do share real numbers and you see the results, right? So this is where I keep everything. Okay. This is our portfolio command center. This is not our net worth. Our net worth video is coming out. And it's really, really soon. I think the end of this month, I'm going to Disney soon. So the end of this month, I think, I share my net worth on the channel once a quarter now, but Patreon folks have access to it every month. Okay. So you can see just right here, I'm going to try to zoom in. But you can see like our assets in this box. This is just a summary of all of our assets. This does not include our main home. This does not include cars, our kids' money, none of that stuff. This is just my husband and I, and really focuses on liquidity. Okay. So rental properties, investments, company stock, NFTs, coins, cash, like things like that. So you can see it all here. I'm not going to read through all of this. I don't want to bore you guys, but you can see all the numbers, and that's what you guys wanted to see anyway. I really do like having the tax class here because, again, when you're structuring your investments, your portfolio, you have to think about taxes. You have to think about how much am I going to pay now or in the future. Here's a little FYI, because I've been asked about this. Our dividends. So we filed our taxes, and a lot of you wanted to know how did that work out. Well, if you watched my video last year where I summarized all of the dividends we earned in all of our accounts, it was like $8,500. We paid 18% on those dividends. So that's less than what our normal income tax rate is. Okay. We paid about 18% and we still got a refund. Why? Because when our tax accountant added in all of the write-offs we have for the rental properties, my side business, Mommy Trader, my husband's side business, we have 3 kids. We actually got a nice size refund. So yeah, those assets, okay, team assets, that's what the government likes, okay? I'm not a tax accountant, it's not financial advice, but any good tax accountant, CPA will tell you, you need assets. It helps businesses, investments, properties. The government has a lot of write-offs and deductions for you, okay? So you can see all of that here. We have a little graph over here. Let me move over a little bit. I like visuals. I like seeing like, okay, we have, this much here, this much there. You can see that our investments fell from the previous month. Let me take you down to our little chart over here. So you can see that our investments fell. It fell a couple thousand, about $5,367. So not as bad as what I initially thought before I ran the numbers, But remember, we still invest every single month. My husband invests out of his paycheck. I invest out of the money I get from MT. So thank you guys so much. And I have a giveaway coming at our next subscriber milestone. So that's 15,000 subscribers. So please make sure, if you find any value, to subscribe, like, and share this so that we can grow this community. But you can see like our 401k fell. And again, my husband still puts money into this. We still put money into this. I still put money into this. But the market is the market, right? But the great thing is that we bought low, right? All of that stuff we bought low this month. But again, our current portfolio is $965,501.63. And like I mentioned, we are down $5,367.18. Yeah, we're down. And you can see like a little bit of our fire goal right here. But like I said, I'm going to do a separate video about that. So our fire goal is 3 million. And then, but like stretch is 5 million. You can see, I have to update this because this didn't update. I'll update off camera, but it's 965. Let's see. And then you can see like some of our fire income sources, right? Because if you retire early, remember, you can't touch a 401k. You can't touch a Roth. Now you can take out your contributions, but there's a 5-year wait on that. But again, that's why we like taxable accounts. We still max out the Roth. We still max out the 401k, but outside of that, we pour a lot of money in taxable accounts so we can access it whenever we want it, especially those awesome dividends. So yeah, that's our portfolio update for the month of March. Let me know how your portfolio is doing. I can tell you that most of us are down. I mean, nobody is immune to what's going on in the stock market right now. But we're going to continue to buy and hold and just, keep it moving. So make sure you like, share, and subscribe if you enjoyed the content. Please follow me over on Instagram. Hit the little bell notification button so that you don't miss an upload. Follow my podcast channel. I have a new episode premiering soon. So make sure you follow me over there. We talk a lot about financial topics. And until next time, I'll see you guys in the next one. Have a good one now. Bye-bye.